Well, hello there, everyone. This is part two. It's December 26th, year 2022. Still Marvelous Monday. Marvelous Monday. Sorry about that. I'm not sure what just happened. At the end of that first video, if you did watch it, it just glitched on me. My phone glitched and it stopped recording. I just froze and then had a little message popped up said, oops, something went wrong. And then it just rebooted itself, kind of like. So I'm starting over. I'm going to do a part one and a part two. So if you're just tuning into this one, go back and watch part one. I'm talking about what would I invest in. Number one was cash. I just started to talk about number two. Number two is real estate. I had said, let me give you my little disclaimer still. I am not a financial advisor because I'm Mazske Finance. I'm not a financial advisor. I'm not a CPA. I'm not an attorney. Okay? Go back and watch the first part, and then watch this part. All right? Number one was cash. Number two is real estate. I said in the first part that the deals are out there. They're harder to find right now. You got to look for them. You got to dig. You got to know your market. You got to know when you can get a good deal. Interest rates are going up, but prices have not dropped just yet. At least real estate's local, so every market can be different. But from my perspective, most markets, prices have not pulled back as like they should. I don't know if they will because it's a supply chain issue. We have a housing shortage. We have it where I'm living at here in Florida. We have it nationwide, I think. There's a housing shortage, supply and demand. Prices may not pull back. They may taper back just a little bit, but I don't think they're going to drop. This is not the housing crash 2.2 from 12, 13, 14 years ago. We don't have that. And I do have my cup of mud water here with me too. Mud water, WTR, mud water. All right. So, but real estate deals, I've always said this. Real estate is to my humble opinion, real estate's the best way to build wealth, the fastest. But you got to have the stomach for it. You got to have the reserves because you will fall in bad time. You will have hard times at times with tenants moving out and you need to rehab the place. You need reserves. You got to have, it can be stressful. You might have to evict tenants. It'll be stressful. But you put in the work, you get the deals. It's the best way to build wealth. Okay? Another option for you for an asset that you can invest in is bonds. I basically, from 1990 up until recently, have avoided bonds. I did not like bonds. I preferred stocks. Now, I would choose bonds. This is the one period of my investing life that I would choose bonds over stocks or something like that, okay? Just as an example, the I bond, you're capped, I think, in how much money you can put into it, but you can get 6.89%, but you got to lock your money up for 6 months, okay? But there's other bonds you can look at. You can look at the 10-year treasury. It's a bond, a bill, whatever, 10-year treasury, shorter time periods. I don't know all the interest rates off the top of my head, but as long as they're paying an interest rate, they're better than losing money, okay? Number four, though, is stocks. Even though we're living in a volatile time period, even though I am on record with saying I think the stock market may flatline for a period of time. I can't predict the future. I won't say it's going to be the rest of the 2020s, but it might be the rest of the 2020s. It might be till 2025. I don't know for sure. But I think we're going to go through a period where it's kind of going to flatline. It's going to drop some days. It's going to go up some days. But when you look back on it, it's just going to flatline. Maybe it's going to trend down. Maybe there'll be a slight upward trend to it. I don't know. But now, with stocks, if you want to buy individual stocks, I will refer you back again, I did it in the first video, to the Motley Fool. Let them do the studying of the stocks, read their write-ups, read their reports, and digest it on which companies you want to pick. Okay? But you always have some companies out there, because when you buy stocks, it's not gambling, it's not a casino. But when you buy an index fund, it is. It's kind of like gambling. It's a casino, kind of. But when you buy stocks, you're buying a piece of a company. You're investing in the company. So to do that, you need to understand that company the best you can. Don't just say, oh, I like such and such. Understand them. Okay. If you don't want to take that time, because it does take a little bit of time, you got to know how to read. All right. Not everybody likes to read. If you don't want to do that, look at dividend paying stocks. You have dividend aristocrats and dividend kings. You can buy those that pay a dividend. It's usually a dividend. I don't know what it'll be. Every company is different, but you can average 4%, 5%, 6%, 8%, 10%. You can get that with dividend paying stocks, okay? After that, I hesitate to say this, but mutual funds or ETFs, index funds, that sort of thing. You notice that's number 5 on my list, okay? I'm not saying to put your money in there now. The only exception would be if you are comfortable with holding the money there for a 10 to 20 year period, okay? And even then, I don't know how long the market's going to flatline. It might flatline for 1 month. It might flatline for 20 years. I don't know. Look at Japan in the 1990s. It took like 20 years when it dropped to get back to where it was because it flatlined for a long period of time. So I don't know. But if you're in my mastermind group, as an example, your goal probably is to become financially independent sooner rather than later. So why put any money into the S&P 500 index fund? I wouldn't. I've said that different times. I wouldn't. People don't want to listen to me sometimes, but I wouldn't. I would perhaps put it in dividend paying stocks. I have a few dividend paying stocks right now. I would put it into oil like Chevron or ExxonMobil. I might do something like that. That's an oil stock. They pay a dividend too. All right. Then there's other things you can invest in, which I'm not going to go into detail on them. But you can invest in companies, in a business. You can invest in equipment. You can invest in yourself, education. You can educate yourself to get a better job, a different type of job. There's other things you can invest in. If you're accredited, you can invest in oil drilling, mineral rights acreage, that sort of thing. Or maybe you can invest in wine. That's another asset out there to invest in. You can invest in art, masterworks. Wine is vino. What's that? There's a company you can invest in wine with. I'm forgetting the number. I get emails from them constantly. I forget their name off the top of my head. And you can invest in farmland. There's I get emails from 2 different companies on farmland, timber, and that sort of thing. Okay, that's other options for you. Okay, I'm not going to rank those options in any order. I have mentioned before oil drilling and mineral rights. I think right now I might put them in front. If you're accredited, I'd probably put them after cash. I'd probably put them in front of real estate, I think, right now. But not everyone's accredited. Very few people are accredited. Okay, if you don't know what I mean by accredited, it means you have a net worth of at least $1 million without counting your primary residence, and or you have a high enough income over the past 2 years with the expectations that you'll have that high income carrying forward. And just Google accreditation online to see the exact number. Okay, because I don't know if it'll change in 2023. It may. They may up it. I don't know. Because I've heard rumors that Congress may talk about raising the accreditation level because 1 million, it's been 1 million for a long time. I've heard a little bit of rumors that they may try to raise it like to 10 million. Hopefully not, because what would that do to somebody like me? I'm not worth $10 million right now. I don't know. But I think I've heard it, but I don't think it's like on the top burner, let's say. But I don't know. I can't predict what's going to happen. Okay. So with that being said, these 2 videos, the first one was like 4 or 5 minutes long. This one's getting long enough. So I don't like to have 2 parts to one topic, but my phone glitched for some reason. So what do you think? Am I full of it, or did I give good advice in this video? I don't know. Let me know. And whatever you do, make sure you invest. Investors will make more money than savers. But if you invest in the wrong way, you lose money. And then if you lose money, maybe you're better off saving money until you learn how to invest. Okay, I dare say a lot of people out there who think they know how to invest don't know how to invest. Okay, so that being said, have a great day. And I am Mazske, who is signing out.